If there isn't discipline, how can there be the true realization of an ideal? Miyamoto Musashi. My friends, our discipline each and every day, 10 to 15 minutes, jumping in these charts. Stocks are up, everything else is down. The S&P is really almost flat. As we look at what happened in the morning, we can see where, according to the Heikin Ashi candlestick, looked like we might have had some up movement. Then in the afternoon, things pulled back. Overall, 0.05%, 0.05%. Okay, my friends, that's not a lot, all right? Not a lot there. Pretty much flat. We can see the volume was okay in the morning, as a little above average. Afternoon pulled off a little bit. As we look at the first day of the latest two-day candle that will close on Friday, we can see where the candle did move up. It's smaller, but it is moving in the right direction. We're okay on the volume for the week. We're already halfway through, and we got a ways to go. Last week, we didn't quite get up to average. We saw where things peaked up higher last week, and this week we have a nice green candle. So we are still long. As I look at our directional probability on the trade execution summary grid, which is part of our 5-day plus ETF trading analysis and execution plan, which is sent at the close of the market as soon as we can get it done and out, was sent out earlier today to our Patreon members. And of course, you want to take a look at it, go to the Patreon page. You can see one from a couple of days ago. If you're a free member, you see it a day later. If you're a paid member, that is a Patreon supporter who helps underwrite the channel, you see it the same day. Of course, for the next day, as you're planning for tomorrow, the 30th of October, as we record this. Directional probability on the S&P is good. Backtest accuracy is good. Even better is the NASDAQ 100 that I've gone to now. The Qs, look at that nice big green up candle. Getting closer. Looks like we'll probably hit average volume for the week. We're above halfway toward the average trend on the two-day chart for volume. And of course, we're peaking up as we move up, reaching a higher high. See where things peaked up in the morning, pulled back some in the afternoon. And with that green spinning top and some of that indecision, we do have a decent volume, actually a little bit above average. And again, as we look at things, we continue to be long. In fact, our directional probability is the strongest of all 5 of our charts in the NASDAQ 100 with the highest backtest accuracy. Also, we're looking for a move potentially of another $11. So, my friends, do be careful as we keep talking. Now, again, we're not a stock calling service. We're an education firm. Whenever we talk about these trades, we talk about practice trades. You're not paying us for any of this advice. Like I said, we're an education firm. We do want you to practice trade with us. And as you look at things and as we see this movement, I keep warning you, there are things out there that exogenous events that can occur that can make this whole market tumble. But we have been seeing things move up strong all the way since April, toward the end of April when this market really took off. We've had a couple of points where things have weakened. We saw that starting around the 18th of August through the 2nd, that is the week beginning the 2nd of September. But then things took off again. Then they slowed down again at the beginning of October to mid-October. Then they've taken off again. So at some point, things will go down. And when they do, we're going to be here watching that too. But right now, and for the last many weeks and months, the getting has been good. And we shall continue to ride that gravy train as long as it is. Now, let's look at 20-year U.S. government bonds. We are going into a doji again. We had a doji back on the two-day chart for Thursday and Friday, the 23rd, 24th. Then we had the Monday, Tuesday, a green spinning top. Now we've got a red doji. And again, volume has been weak. We have to, on the two-day chart, go all the way back to Friday the 17th of October for just average volume. Last week, we're going into the third week. Well, I mean, we're not at the end yet, so I don't know if this is going to keep going lower. It's probably going to move higher. But last week, it was down from the week before. It had been building for 3 weeks, got up to a nice, two strong candles, and then this week really slowing down. And we can see where that started on Thursday the 23rd, moving down, popped up on Monday afternoon and Tuesday, and then started waning on Wednesday as it's down 1.01%. We saw where the wick on the half-day chart penetrated the weekly trend line, but not the candle. And we can see where the wick is sitting right on the weekly trend line. And again, I caution you every time, if you look right now, it looks like the wick has gone through the on the two-day trend line through the weekly chart. That's just because these dashes can be confusing. So I'll always go and then step over, and you can see that indeed that red spinning top, or red doji rather, is just sitting, the wick is just sitting right there on it. And we look at where we are with the weekly, and we got a ways to go to get to average volume. So there is some weakness. As we look at the math, as we run it on our 5-day plus ETF trading analysis for TLT, we are more than a coin toss, but it's showing more of a downward pull, actually, because of some of this inherent weakness and inability to actually move up going into 5 days now. Again, that's where we are as far as what the math tells us on this, and it's explained quite well in our trade execution summary grid and in our 5-day plus analysis. I urge those of you who are interested to read it, where we break things down both in the key Heikin-Ashi candle patterns and time frame consensus, the 2-day time frame, the 195-minute, and the weekly time frame, also the price direction prediction, the best trade entry points, strategic profit exit points, and expected move. And again, those percentages that we list in the trade execution summary grid are very important for you to pay attention to, but not totally dispositive. Now, let's move on. And one reason I say that is because I tell you how important it is to chart these markets each and every day so you learn the nuances and you learn when to use that 5-day plus trading analysis and execution plan and the trade execution summary grid, and when not to use it. Again, it's very important that you don't let yourself get confused with just the raw math of something, but you also use your experience. And we always fault on the side of being conservative. You want the trade that is going to be the best with the highest probability that you understand based upon what you have done in the past. We don't take chances here. We don't trade on 60 or 70 or 75% directional probability typically. We want to be 80, 85%. We want to make sure that we are being smart. First rule of trading, don't lose money. Second rule of trading, don't lose money. Third rule of trading, make money. Let's look at gold. Gold pulling back. And as we look at gold, we can see that our directional probability is sort of a weird one. We don't usually see sideways. That's what we're seeing right now. Why? Well, of course, we busted the trend line on the weekly chart. On the 2-day chart, and we're well below on the half-day chart. Gold has pulled back rather strongly. When we see something like that, there is rarely, my friends, rarely a quick recovery. So again, when we see this break on something like gold, with all the weeks of run-up, but especially with things like S&P 500, NASDAQ 100, which we've been talking about, when that break occurs, like we see on gold, it's going to be the same thing, but probably even more so, because there have been so many weeks of just unrelenting up movement. And once that energy is sucked out, it's like the fire doesn't have any oxygen. It's like the wood's burned up and you don't have any more fuel. And what's going to happen to the fire? It's going to go out. It's going to get cold. And it's going to take a long time for that to start up again unless there's more fuel and typically there's not. So we do see gold pulling back for the day, 0.38%. Look at that. We've got 4 down 2-day candles. We've seen where gold really blew off. Was 6-something% back on Tuesday the 21st, moved down in the morning and the afternoon. And then it moved again, down again on Wednesday morning and then slid up and then pushed back through that weekly trend line down. So that is where we are on gold. Now let's move on to Bitcoin. Now Bitcoin down for the day 2.68%. We saw Bitcoin move down, 2 red down candles, and then this week punching through. And we had a strong 2-day candle, but no volume to back it up. Did you catch that? No volume to back up that 2-day candle. And then a doji forming now. Down in the morning, further down in the afternoon as Bitcoin just couldn't hold it. Punched through on the half-day and on the 2-day and on the weekly, but it's weakening significantly. So we'll keep our eye on Bitcoin. We do have a downward directional probability, not much more than a coin toss, but it is down on Bitcoin at this point on our trade execution summary grid. I so appreciate you being with us. I may have been a little bit long-winded today, but I hope it's helpful. I share all this with you each and every day because I want it to be helpful. I want you to be ready when you do start trading with real money. I want you to take all the lessons you can, practice all you can, take everything that helps, discard the things that don't, make yourself practice trade, get into fractional trading, later small dollar amounts where you're doing real trades with small dollar amounts of money and proving to yourself you can do this. And once you become a master, you don't have to worry about how long it took, because you'll make up for all the time you ever spent. God bless, my friends. All the best from the whole team at Charting Wealth and the new Patreon members we've had lately. Thank you so much for helping us in underwriting the cost of the channel. If you want to help, join us on Patreon. You'll get my free book immediately and our 3-part series, Options Made Simple, The Charting Wealth Way. God bless.